CNBC-TV18.
80 points now, so looking pretty solid and pretty good out there.
The markets, they continue to edge higher, up around 98 points on the Nifty as we speak.
This is the last hour of what has been a truly good series for the bulls. I mean, of course, this week's volatility notwithstanding.
Nifty Bank was the sore point today. That from being the big outperformer was the underperformer by the time we wound up. It ended with a cut of close around 0.5%. And the breadth of the market as well, that was firmly in favor in the number of stocks advancing.
Hello and welcome to CNBC TV18. You're watching Markets Today, the show where we track about 6 hours of the day's trading action in 5 headlines. I'm Ekta Batra. Here are the top stories that we're tracking this evening. Indian financial markets remain cautious as they wait for fresh triggers from the central bankers meeting in Jackson Hole later this week. Stocks give up early gains, drop sharply into the red in the fag end of trade. Sensex and Nifty close 0.5% lower. Bharti Group and Singtel promoted Bharti Telecom is set to buy the Singapore telecom major's 3.3% stake in Bharti Airtel. The move lifts an overhang on the stock. The Fertilizer Ministry moves a proposal to introduce One Nation, One Fertilizer from the 2nd of October, orders all fertilizer companies to change packaging on subsidized fertilizer, says 2/3 of the bag must display the brand name Bharat and the logo of the central subsidy scheme. Lupin gets a complete response letter from the US FDA for important inhaler drug Spiriva. The company tells CNBC TV18 it is hopeful of resolving issues and getting an approval for the generic by Q4. In stocks and news, RBL Bank rallies for the second straight day, gains 5% on a large block deal. Asahi India hits 52-week high on rising auto demand and new launches. All right, well, let's tell you what we have lined up in this on the show for you. It's a packed show as always. In Market Opinion, we have Sridhar Sivaram of Enam Holdings, and in Corporate Voices this evening, we have Ramesh Swaminathan of Lupin. A last hour collapse on expiry factors saw the Nifty, Sensex and Nifty Bank fall over 1% from its highs. However, for the series, the markets gained for the second straight series. Frontline indices rallied between 4 to 6% in the August series. Anuj Singhal is here with a wrap on all what took place today.
Well, the market was doing absolutely fine up until 2:30, and then somehow the last hour really, the bears came back with a vengeance. Maybe it was the expiry factor. It was the monthly expiry, remember, and the market had some decent gains. But the Nifty slipped over 200 points from day's high, and the Bank Nifty slipped 500 points from day's high. In terms of stocks, you had the two large cap IT stocks, Infosys and TCS, leading the decline. Some other heavyweights like HDFC, Larsen & Toubro, ITC, some of the stocks which normally move on expiry day were also dragging the market. And of course, you had other names like Adani Ports, Bajaj Finance and Cipla, which were also down. Now, the broader market was actually doing quite okay, even on a day like today. Despite the last hour decline, and you had some select gainers like BHEL, L&T Finance, City Union Bank, all F&O names, all up between 5 to 10%. All in all, you'll say that perhaps the trend is still slightly on the upside. There's of course this Jackson Hole Symposium which comes up now. So let's see how the market reacts to that. For today, of course, the last hour really brought some volatility back into the picture.
Okay, all right, some volatility back into the picture. Anuj, thanks very much for that. Let's get in some market opinion then. Sridhar Sivaram of Enam Holdings said that while the Indian construct is looking great, the global one is not. He added that one must buy on dips in the Indian markets. Listen in.
Our broad view is that the construct for India is looking great. I mean, inflation, we think for the month itself will come around 6, and it is trending lower. GDP growth looks like it's trending upwards. Consumption is looking as if it's coming back. But when we look at the global construct, it just doesn't look that great. I mean, it will be very difficult for India to move in isolation. So if there is issues globally, we will face the brunt. So I would say that this is more a buy and dips market. You have to be very careful when there is irrational exuberance. Broadly, the value guys are on top, and growth is suffering. But our view in the last 2-3 months is that it's time to slowly get into growth. And the first of the block, at least that's our view, is the financials, which is the banks. See, the private sector banks have really come out very well. They credit costs have actually normalized much faster than anybody would have anticipated. We think that the next 5 years is going to be great for large banks. Any bank which can access liabilities, that's going to be the crux. That if you are able to access CASA and your deposit cost is reasonable, then I think those banks will do well.
Okay, well, let's get in some more opinion then. Phu Khain Yap, who's the senior investment strategist at StanChart, is optimistic about the Indian market. He added that he prefers large caps.
We also see India outperforming Asia ex-Japan equities. So we have a preferred view for India equities. And, the view there, I think, very much is driven by what we see as still a strong domestic economy. And I think we're seeing very strong earnings growth, double-digit earnings growth, I think, for the third consecutive year in India for the Nifty index. So, and that's much better than other places. In other places like China and Asia, it's looking at single-digit, and it's been actually being downgraded, whereas in India, actually, it's been quite positive. So, across against that, of course, is always the valuation premium for India equities. It's trading at a premium to its other peers, and the premium is actually above the historical average. The view that we have is more on a large cap in India. We prefer the large caps to the mid and small cap. We think that's going to be a bit more beneficial in terms of the domestic macro strength. But also, being in a bit more of a volatile market situation, we think the large caps are the ones that we do prefer. And the other tilt that we have in India actually is towards the value-driven stocks. And that's another theme that we have globally as we see rates going up. That's actually beneficial, we think, for value. So, value did very well in 2020, 2021. This year has been a bit mixed, but we do see the strength of value stocks broadening out. And that is actually another theme that we prefer within India.
All right, on to the second headline now. Bharti Airtel ended the day mildly higher after the company's promoter Bharti Telecom is looking to hike its stake in the telecom major, with Singtel set to sell 3.3% stake in the promoter entity. Nimisha is here with the details on this story.
This is the official disclosure which came from Bharti last late night, wherein it's an indication that Singtel, which owns a little over 13% in direct entity, will sell 3.3% stake at a valuation of close to 2.2 Singapore billion dollars. So that works out to close to 13,000 crores. Now, because both are promoter entities, it looks like it's going to be an off-market transaction between the two promoters. So Singtel will sell 3.3, and the Bharti promoter entity will buy out in Bharti Airtel. That's an arrangement which was officially disclosed. Now, beyond this 3.3%, it doesn't look like there will be further selling from Singtel, at least in the near term. That's number one. And two, there is a disclosure that going forward there could be further readjustments of the stakes between the two promoter entities. So that's the official disclosure. So the market is reacting positively. The stock is because one, the belief is that this will not be in the open market; it will be an off-market transaction. So there will be no supply overhang, and B, the fact that there's not going to be further selling from Singtel, at least in the near term. That's a relief rally. So that's why stock is reacting positively. But in a big corporate development, Singtel has decided to sell or transfer 3.3% stake in Bharti Airtel to the Bharti promoters, and most likely, what I understand from sources, is going to be an off-market transaction.
Okay, all right, Nimesh, thanks very much for that. So that's the big story on Bharti Airtel. But moving on to the third headline this evening then, the Ministry of Fertilizer has issued packaging rules for fertilizer companies, which said that 2/3 of the fertilizer company's bag will use the logo of the government's fertilizer scheme Bharat, and 1/3 of the bag will be used for the fertilizer company's name and logo. Sonal Bhutra is here to tell us more about the impact this could have on the companies.
Thanks a lot for that. Well, yes, the government has come out with new rules as far as packaging for fertilizer company bags are concerned. They say that they will implement one nation, one fertilizer rule by introducing single brand for all the fertilizers, be it private sector or public companies like RCF, NFL, etc. Single brand name for some products like urea will be Bharat Urea, for NPK will be Bharat NPK, DAP will be Bharat DAP, and so on for other products as well. Now, after this, what happens is 2/3 of the fertilizer companies' bags, they will have the fertilizer subsidy scheme, which is run by the government, and also the unified brand that the government has announced. And 1/3 of the bag will have the company which is producing that particular fertilizer's logo and other details as the ones that are required by regulations as well. So fertilizer companies, according to the government, should not procure old bags with effect from 15 September, that is the next month, and new bags under the new scheme will be introduced with effect from 2nd October 2022. And they have by the end of this year, that is 31st December, to completely fade away the older bags from the market. Now, it came across as a sentiment negative for, say, private companies whose brand visibility could be impacted by this particular change in packaging rules. However, this is just a sentiment negative. Overall, on the longer term, they have good brand visibility, they have better distribution and higher market share in distinguished territories or markets as well. So it is not such a big negative that has come across. But yes, there is a big change as far as packaging is concerned in this particular sector.
Okay, all right, Sonal. Thanks very much for that. We need to take a short break, but before we do that, we'll leave you with some more market opinion we got through the day. Stay tuned. We'll be back in a jiffy.
I think that if you look at emerging markets, there are about 150 developing countries out there. So I think that the Fed's decision has a different impact on different markets. But clearly the most vulnerable to me is China, because, we've spoken so much about inflation and how inflation is rising everywhere. But one country that is still suffering from possible deflation is China. Their ability to stimulate and cut interest rates is going to be constrained by the fact that the Fed is increasing interest rates because that accelerates capital outflows from China. They don't want a repeat of that. The currency has already depreciated around 7% or so this year.